Hi, this is Dave with Market Trading Concepts. It is Saturday, July the 14th, closing out the week for Friday, Lucky Friday, July the 13th. So we had a pretty interesting Friday the 13th, and I guess it kind of lived up to its expectation. Let's start out with the Dow Futures and take a look at the price action. So we're looking at the continuous contract of the Dow future on the daily chart. So last week, what were we expecting? Well, I was expecting this trend line and this 20 period moving average, rather 21 period moving average here, and this trend line, there was a zone setting up, and I was expecting that zone to kind of hold and then push higher up to retest, these highs and then ultimately these highs. Now, I think that still might be in the cards, but what we experienced last week is we had a number of down days. I'm just going to zoom into the chart here. We had, let's see, we had 1, 2, 3, 4, 5, 6. That's quite an extended number of down days. Usually between 3 and 5 down days, you're expecting an up day. So it did play out on Lucky Friday, but what happened was, from a market structure standpoint, it's still intact because you have a low here, you have a higher low here, and technically you still have a higher low here because this low is higher than this low. However, this was a pretty tough area to trade as a swing trader, because if you would have thought that this 21 period moving average would hold and this trend line would hold, you would have taken a little bit of heat, and then you had this huge kind of up day on Friday, yesterday, and it was a little bit tricky to trade, at least in the Dow futures. So let's take a look at a couple of other things to do with the Dow future, and then we'll shift over to the sister indexes. So for example, this high to this low, from this high to this low, what you have happening is you have a zone here where you're in between the 50 and 61.8% retracement. And you can see here, you sort of held the 50% retracement of that move, and then now you closed right at the line in the sand at the 61.8% retracement. So if you take a look at this from a different perspective, I mean, I still am cautiously bullish on the market because this market structure is still in place. Technically, it's still in place because, you still have a higher low in place, you still have a higher high in place here, and you still have a higher low in place here, okay, and you've got a higher low in place here. So in terms of from a market structure perspective, I think the structure is still intact, so I'm still a cautious bull, recognizing that we closed right at the line in the sand here on Friday, which is not uncommon. The market likes to mess up the most brains possible, going into the weekend, just to make it a confusing experience. So from a swing trader's perspective, it's kind of a difficult spot to be in here. I still have the expectation of retesting these highs, ultimately these highs breaking through and putting in a new swing high. That is just my opinion, and that's just kind of what I'm expecting. And just a reminder, this is not advice to take any type of market positions whatsoever. Please study the disclaimer at the beginning of this video carefully. So let me just pause the video, and I'm going to zoom out to another perspective on this market. Okay, so here is the chart of the same chart of the Dow futures on the daily chart, and I've just zoomed the chart out to take a look at a bigger retracement. As you can see here, we're in this kind of bigger uptrend, and we had this kind of major uptrend, minor downtrend pullback. And now we're kind of stair-stepping higher. So if you look at this retracement, this high to this low, you're in between this kind of 50% and 61.8%. retracement zone that some people like to call the ambush zone, some of the people that we followed over the years. If we take a look at this from a different perspective, let me just delete these fibs, and let's throw on some fibs from this low to this high. And what you can see is that where the market pulled back to here, this was a 50% retracement of this major move from this low to the high up there. Okay, so let me just kind of squelch this down a little bit. So from this high, from these highs to this low, here's your 50% retracement right in here. So from a technical standpoint of this major move, this is just a normal kind of pullback within the context of this uptrend. So for that reason as well, I am still a cautious bull. Let's flip over to some other charts and take a look at the sister indexes and see if we can kind of get an idea if they're all telling the same story. Just before I jump over to that chart, I just wanted to point out one other thing. As you can see here, we came back down and tested this 12,521 support level, which I think is a fairly major support level that we clustered around it here, and we just clustered around it here as well. Ultimately held and pushed higher. So let's flip over to some of the other charts. Okay, here is the S&P futures, the ES contract on the daily time frame. And what you can see is we had the same kind of situation as we did for the Dow Futures. So this looks fairly pretty much the same. They're moving the same. The Dow had kind of a double top back in this area here. But as you can see, the S&P future did from this low to this high a 50% retracement of that major move, and then you can see here you had sort of a reversal take place here from lower lows, okay, back into a higher low situation here. Now I've got two trend lines drawn in here depending on where you want to grab the trend lines from, but basically you held this zone and these trend lines a little bit better than you did on the Dow. And now what you can see happening is you've got kind of a wedge pattern forming. If you draw a trend line from these highs and from these lows, you can see that the price is kind of coiling up here and you've got this wedge. And the expectation here is, I think the price is tightening up and you're going to get a breakout one way or the other. Now, as I mentioned, I am a cautious bull for the reason that, my trending indicator is pointing higher. I don't see any divergences here. You've got a higher peak and trough. And on all of these time frames and all of these, rather not all of the time frames, but all the daily charts on all the stock index futures. So this is kind of what I'm expecting to have happen, a breakout of this wedge one way or the other. If it pushes down, I would consider that initially to be a fake out until it confirms otherwise. So for this situation to change for me, what I'd be looking for is a couple of decisive closes, 2 or 3 bars below this trend line and below the 21 exponential moving average. Until that happens, I'm still on the bullish side of the market. Now we did have quite the pullback in and around this area over the last week, but now you can see in the S&P future we're above the trend line, we're above the 21 period moving average, and we closed really basically at the highs of the day on all the stock index futures, including the S&P. Okay, now if we flip over to the Nasdaq, you can see the same situation taking place. Okay, you probably heard my dog Pistachio barking in the background there. I apologize. Basically, the Nasdaq, you're looking about the same, a 50% retracement. I mean, technically, we should probably draw these fibs from this low point. So let's just redraw them from this low right in around there to this high, right in around here. And as you can see, you've got your 50% retracement in here, which held nicely. It's a terrible arrow, which held nicely. You've got this kind of trend line, this kind of loose trend line forming. You've got a series of, stair stepping here, higher highs, higher lows. And now you're just below the 21 period exponential moving average, but you're holding this trend line. So the expectation here, you've got this kind of wedge pattern forming as well on the Nasdaq. And what this is all telling me is that, the price is kind of coiling up and it's getting tighter and tighter, and we're probably looking to bust out of this wedge on all of the stock index futures. And what this is telling me is we're probably looking for a big move one way or the other. So when you take all of these pieces of evidence and comparisons into consideration, I think we're basically setting up for a fairly big move one way or the other. I'm leaning more towards the bullish side than the bearish side until such time that the evidence proves otherwise. Okay, I just wanted to review the markets, the stock index futures from the Darvas squeeze perspective. You can see here's the Dow Futures, and on the daily and the weekly chart, we have a squeeze with a potential breakout situation happening on the Darvas squeeze. Now, we don't have any of these situations on the S&P futures or on the Nasdaq, but we seem to have it on the transport. So we'll take a look at and we seem to have it on the VIX as well. So we'll take a look at these charts one at a time too, and just kind of go through them fairly quickly. I want to keep this video short. So let's look at the Dow futures. Let's look at the daily chart here. You can see the daily chart has kind of a higher low in place, and it is in a Darvas squeeze situation with the potential to break out of this Darvas box. So we'll be looking at this Darvas box and the Darvas squeeze setup for kind of a heads up and for direction on which way this market wants to go. So we're looking for guidance outside of this Darvas squeeze situation on the daily chart. If we take a look at the weekly chart now, the weekly chart is the same situation where you're in a 1 dot weekly squeeze. You're net bullish, and but you're in the middle of this Darvas range. So that's not very telling. You've got a long way to go to the high side, a long way to go to the low side. So I think the daily Darvas squeeze would be a much quicker heads up as to what is going on. So we're going to skip these two because we don't really have much on them. If we look at the weekly chart of the transports, let's see here. Let me just expand this out. Apologize, it's a little bit messy. So you're in a Darvas squeeze situation here, an elongated squeeze. The trending indicator is pulled or pushed to the high side, and is more bullish than bearish. The MACD has kind of tested the zero line here, and it's tested the zero line here, and it looks like it's holding. And then the price is really closer to the top of the Darvas box range than it is the bottom of the Darvas box range. So there's a potential weekly signal forming here on the transports that I'll be keeping my eye on. And now if we kind of jump back over to the VIX, on the daily chart, you can see here we have a Darvas squeeze situation forming. And if it fires off to the low side, that would bode well for a situation of higher prices in the stock index future. So you can see here we're testing close to the bottom of the box. Darvas squeeze setting up. This could fire off, definitely could fire off short, boding well for higher prices in the stock index futures. Let's take a quick look at the dollar index. Now, the dollar index had a pretty good down day on Friday, which is to be expected, when the stock index futures were going higher. But what I find a little bit still confusing or divergent in terms of normal correlations is that, we've still got buy signals on the US dollar. This Darvis squeeze that fired back a little while ago on the daily chart. And, we're breaking out of a weekly chart, and we're still bullish on the weekly chart of the dollar index. So even though we had a decent correlation intraday Friday between the dollar index and the stock index futures, net to me, it looks like the dollar index is going higher and the stock index futures are kind of going higher. So I think that situation will need to resolve itself. And if we take a look at the euro, take a look at the euro quickly. The euro just looks pretty negative. It broke through those recent lows and it retested new lows. Not retested, but it actually put in new lows on the weekly chart. You had these lows in here, and then you pushed below them last week, and then you had a Darvis squeeze short that fired as a Darvis squeeze long fired on the US dollar index. So that's kind of to be expected, because those instruments move opposite each other. But you can see here, you have this Darvis squeeze short on the euro, which is still in play. At this point in time, I think it's pretty extended. I would kind of expect some kind of a pullback into, some of these levels here, the 8 EMA on the daily or the 21 EMA on the daily. But, you've got the potential for a target a little bit lower down here. And this signal is still in play. This Darvis squeeze signal is still in play. So we'll have to see how that kind of all resolves itself out. As I mentioned, I am a cautious bull on the stock index futures still. Even though we had that pretty decent pullback last week, I think we pulled into support. We popped off on Friday. That looks, like we might be set to put in a higher low and push higher in the stock index futures. The Nasdaq, the S&P, and the Dow Futures. So that being said, the only thing that's not really clear to me at this point, in my own mind, anyways, and just in my opinion, is the how the U.S. dollar index is going to resolve itself if the if there's going to be a decoupling of the normal correlations there, or if one is going to break and kind of give way to the other and resume the correlation. So we'll have to see how that plays out. I hope this was helpful. I will look forward to seeing you all at the next meetup or at the next video update. Beautiful weekend out there. Hope you all enjoy some time away from the screens, time away from the markets, and get to spend some time outside with your family. So good trading. Hope it helps, and see you soon.